So if you want to know how to use the MACD to get your trading game on the road, you have come to the right video. This is Similolu, and I'm going to take you step by little step through the ups and the downs, the ins and the outs of the MACD, so you can know how to better trade, how to be a more profitable trader, and how to get your trading game on the road. The MACD is a very popular indicator that helps you figure out the general direction of the market. Is it a good time to enter into a long position? Is it a good time to get out of a long position or to enter into a short position? Now, it doesn't matter whether you trade cryptocurrency or currencies or equities. Whatever it is you trade, the basics of the MACD remain the same. Now come along with me back to the computer while I show you exactly how to do this. We'll start here using a Netflix chart, and it's a daily chart. Now this platform I'm using is called THINKORSWIM, and I'm going to add the MACD indicator. Now that I've added the indicator, we see it right down here at the bottom. These parameters, 12, 26, and 9, are pretty standard. And of course, we can see price action moving up and down across the chart. The big question is, when is a good point to enter into a trade or to exit out of a trade? With hindsight, looking back over the chart, we can see that down here would have been a good point at which to enter into a trade because price action moved up over the next few days. So I've highlighted 3 points that could have been potentially good entry point into a trade with Netflix. Now let's look at the MACD and see if the MACD would have given us a good entry signal. Our first probable entry point could occur right here, where the bright red histogram bar changes to a dull red shortened bar. The bars progressively reduce as they approach the zero line. The green histogram bars display above the zero line, while the red bars display below it. Now from here on, price action just sharply increases upwards over the next 4 or 5 days. Looking at this second area of increased price action, let's see if a MACD could have indicated this particular increase. The fact that we have a crossover here doesn't necessarily indicate the actual point at which to enter into a trade, but it does begin to alert you that this could be a good entry point. Now, at the same time, if you look at the histogram, you can see that it's changing from the red bar to the green bar. So that's a changeover. And going long at this crossover would make a good entry point. So that goes up from $342.30. Over the next few days, it goes up to $382.65. So that's a $50 increase in price action. Now take particular note of the fact that the green histogram bars are slowly increasing and bright green in line with the increase in price action. Here we can see that price action increased pretty sharply over a period of 4 days. And of course, with hindsight, we'd say to ourselves, if I'd known, I should have bought at this point. The indication would be the fact that at this point, price action increased rapidly over the space of one candlestick, that's 1 day. Then one could possibly have entered into a long position at this point or at this point. Over the course of the next 2 days, we had the increased green bars and they were highlighted, which shows a very heavy presence of buyers. The more the buyers, the higher the price goes. So we see here price action moved all the way from the bottom of the white rectangular box up to this, even beyond this rectangular box. So whether we entered at this point on account of the histogram lighting up, or we enter into the trade at this point on account of the histogram increasing in height, either way, the MACD indicates that this is a great entry point for a long position. Now, it would make sense if your entries are actually timed closer to the point of crossover rather than after the point of crossover. This just makes for a safer trade. So I want to show another situation both here where we have a crossover and here where we have another crossover. So we've got two crossovers to the upside. The blue line crossing over the beige line. We can also see the histogram follows suit. We have first the deep red, and as price action increases, it becomes a dull red. And as price action increases some more, it turns into green, which coincides with the crossover. And of course, this indicates this sharp move upwards. Not much happens between here and here, where we see these two lines consolidating really. They're neither up, they're neither down. So this is not obviously a good time in which to enter into a trade. So now again, we wait here for the crossover. At this crossover point, we have the histogram changes from a very slight red, but red nonetheless, changes to the green. This coincides with the crossover, which again coincides with this sharp price action upwards over the next couple of days. The converse is the case down here, where again we have this crossover but to the downside. So we're up green, even though it's the dull green changes to red. Again, that is a sign of decreased price action. And what do we have with the price? We have that gap all the way down. That's a good $379 all the way down to $369. So that's a good $10, $11 drop in price. This was caught by the crossover of these moving averages. Now, I want to sound a note of caution, and that is that the MACD on its own should not be used as your only signal to enter into or exit from a trade. The MACD is best used to confirm how price action is trending. So I hope you found this educational. I hope you've learned something from this video. If you have, please give it a like. Drop a comment right below in the description box. Share with your friends and family. That's all I ask in return. And if you really enjoyed my content, subscribe to the channel, but most importantly, don't forget to hit the bell. And I'll meet you in the next video.